right. Everybody ready? Great. Well, hello again. Nice to see you. Really delighted to have this panel of institutional superstars here. And I have Lucy Taylor, who's at Coinbase. I have Shobit Maini from Citi Markets. I have Martin Howard from Wilshire, and I have Martin Leinweber from MVIS. And I just want to say a big thanks again to our headline sponsors, and they are BCB, Bitstamp, LMAX Digital, and Bybit. Now, the panel will run for about 35 minutes, and we've got Slido working now, so apologies from this morning, but we will see the questions appear on the screen, and we will try and get through 2 or 3, I'd hope, by the end of the panel. So please do put that in. But for now, I'd love for my panelists to introduce themselves, and perhaps, Lucy, you can start.
That's great, thank you. Thanks for having me. I'm delighted to be here. I sit in the institutional sales, trading and prime business at Coinbase here in the UK, and we cover the EMEA region. My focus is on both UK hedge funds and Switzerland. My background is prime brokerage sales. I was with UBS for 10 years in Switzerland and HSBC for 5 years prior to joining Coinbase last year. At Coinbase, we are the largest global crypto custodian. We have $278 billion of assets under custody, of which $137 billion is from institutional clients. So very happy to talk about that in more detail today. Looking forward to our discussion.
Thank you, Lucy. And Shobit.
Hi. Thanks, James, for having me here. And it's good to be here. I'm Shobit. I'm the co-head of digital assets and blockchain for Citi's global markets business. It's our primary trading business. I'm responsible for driving our agenda for digital assets and blockchain for the markets business and developing products and solutions for our clients. So look forward to the conversation with this panel.
Thank you, Shobit. Martin H. We're going with.
Yeah. Thanks,
to differentiate.
So I'm Martin H. Because there's 2 of us Martins. I'm at Wilshire. I'm on the index research team at Wilshire. I've been there for about 6 months. Prior to Wilshire, I was at FTSE Russell on the equity research team there. In both places, my remit is very much to design new index products with a non-market cap weight bent. But particularly in the last 3 or 4 years, my focus is primarily on digital assets and how to index digital assets.
So
thank you.
Yeah.
Martin L.
Yeah, I'm Martin L. So I'm working for MVIS as a digital asset product strategist. We are an EU-regulated benchmark provider. We do various asset classes, so equities, bonds, and digital asset indices. That's the reason why I'm here since 2017. In my former life, I was a fixed income guy, a portfolio manager, so I hated benchmarks. It was always hard to beat them. Now I love them. So you need benchmarks. So it will be interesting and exciting discussion, I guess.
Yeah, thank you. And actually, whilst the title of this is called Where is Institutional AUM Going, I've interpreted it a little bit more broadly to get the absolute maximum out of our panelists. Basically, where is the service provision going and also the assets under management. So, Lucy, I think I'd love to start with you, if that's all right. Coinbase is, in very many ways, sort of one of the big leading lights in crypto, and very much initially a big retail on-ramp, and but now you've of course branched out to a myriad of different products and services. I'd love to just hear the ways that you currently serve the institutional segment.
Absolutely. So taking a step back, we launched Coinbase Custody in 2018. And at that time, there were 2 standalone products. There was the custody, cold storage, and there was the exchange for trading. In autumn last year, we launched Coinbase Prime, and that is an all-encompassing prime broker solution. And there's 4 key pillars to the product. The first is multi-venue execution via a smart order router. And that means that institutional clients can contract with one counterparty, and that's Coinbase, but they get to access aggregated liquidity from a number of regulated exchanges and OTC desks. We can offer algos, and we're acting on an agency basis. The second part is custody, so cold storage. We are a regulated custodian. We're regulated by the New York Department of Financial Services, and we can offer such services such as staking directly out of custody, which is quite unique to the offering. The third part is trade finance. So we've built solutions to help clients in terms of we can offer a post-trade line of credit. So if you have your assets in the cold storage and you want to trade on those assets, but actually you don't want to move them back into your trading wallet, we can give clients a pre-agreed line of credit, and then they can just net settle at the end of the day. We also can offer borrow lend as well. And then the fourth part of the Prime offering is the data analytics. So we acquired a platform called Skew. That was in 2020. And you may know of Skew. It's a derivatives data market data platform. We've incorporated that into the Prime platform, and we can now offer clients charting and data on not only spot, but also derivatives as well.
Wow, you've come such a long way from when I was first logging on to Coinbase and basically just market buying Bitcoin. You're a listed company now. Could you share some interesting stats from the last filing in terms of how that sort of adoption has happened and how big the business is?
Absolutely. So as of full year 21 and 31st of December, so we have 11,000 institutional clients. As mentioned, assets under custody from institutions is 137 billion. Yeah. And that's super interesting because the same number in full year 20 was 45 billion.
Wow.
In terms of assets that we support on the platform, so 170 assets for custody and 158 for trading. And in terms of trading volumes, I find this an interesting stat. The full year of gross trading volume of 2020 was $120 billion, and the same figure for the full year 21 was $1.1 trillion.
It's incredible. So we've got growth, that's for sure. Martin L. Now, you're one of two indexes on the panel, both very favorite partners of ours. Could you explain the role that MVIS plays in this institutional ecosystem, and what services and products would an indexer provide?
I think when it comes to our clients, and especially the asset management clients, I think they demand a deeper partnership than just pushing out benchmarks. Yeah? So very often a client comes with a rough idea about an index, and then the advisory part begins. Yeah? It's a back and forth of defining rules, sending back tests, and so it's, I think, a little bit of education you also have to do. Yeah? So sometimes clients come and want to have a top 10 index, but want to avoid meme coins. So what is a meme token? It's hard to define it as an indexer. And the other thing is that you have strong customization capabilities, as the market is very fragmented. Yeah? So we have hundreds of exchanges. Most of them are unregulated. You have no standard closing time. And even you don't have a standard quotation pair. Yeah? So normally it's against US dollar, but sometimes it's against Bitcoin. Now we have a lot of stable coins, so you maybe want to add that. And so you really have to have this customization capability. So no client takes an index off the shelf and just says, okay, I take it, please plug it in. That's at the moment not possible.
Thank you, Martin. I mean, I guess a little bit more basically, so you have an index. Can I buy it? How does it work? Like, what's the connection between an investable product and an index?
Well, the connection is that you first have to define the rule set. You have to define the pricing data. Every client comes with another opportunity set. So maybe you have to trade on certain exchanges. Right. You have to need certain market makers and or custodians. Yeah? Right. So suddenly your token set from theoretically 30 coins shrinks to maybe just 15 coins. Yeah. And that's very important to make that clear, to be transparent. Yeah. So
there's a link then with tradable products like ETFs and ETPs, but also private funds that an indexer would enable. Great. So Shobit, I mean, it's brilliant to see the likes of Citi Markets on this panel. My alma mater, I started there. So really good to see you entering the space. What's your current scope, though, and sort of what are your clients asking you for?
So for us at Citi, right, like everything starts with the client, right? So the way we are approaching the space is in terms of what clients ask of us, and what can we do, what can we offer to clients in a manner that's compatible with the regulatory standards we are subject to. So what are clients asking for, right? I mean, clients are asking for a series of services across the entire trade life cycle, right? From pre-trade to think about research, etc., to trade, so execution, and post-trade all the way to settlement and custody. Obviously, we are working through with regulators to understand as that regulatory clarity comes through. We aim to launch products in a manner that we can be consistent with our risk frameworks. But having said that, in the past year or so, we've started publishing research. We are providing agency execution for regulated products such as futures and ETFs, and hopefully, as regulatory clarity emerges, right, we hope to provide more services which our clients are demanding of us.
Yeah, no, thank you, Shobit. And I read that report when it came out, and it moved the market. It was very much a very well-read piece, and it really spoke highly of the thinking that's going on at places like Citigroup. So fantastic to see. Now, Martin H., it's interesting. We have a new entrant into the market in the digital asset indexing space, and you already offer a wide array of indices. So what was the rationale, do you think, between Wilshire entering the space, and how do you differentiate your offering where some of the incumbents already have some product?
Yeah, so I'll take the first part first. For Wilshire, it's very much about digital assets being the future. In particular, we see the technology that underlies them as being incredibly disruptive, not just to the investment cycle, but also to the traditional markets, particularly capital markets and the settlement process. Mm-hmm. So for us, it was just a no-brainer, really, that we had to be involved in this space. And on the investment side, it's changing how people invest. So we see it as a sort of venture capital-esque type approach, so people can invest in a particular technology or particular theme of coin and gain that exposure through a investment product that they're familiar with. So that's really why we think about it as bitcoins and so on. This is the future. How we differentiate ourselves, very much Wilshire is a three-pronged company. It has an advisory role, it has an asset management fund type role, and it has the indexing role. So we can leverage those three aspects to help our clients. We've also want to be thought leaders in the space. So to that extent, we've created a digital asset advisory board, which is chaired by Blythe Masters and encompasses a whole variety of topics. It's not just Wilshire topics, but broadly the crypto space topics where we think direction is needed. So that might be on unique identifiers. It might be on taxonomy, for example, the digital asset taxonomy that we launched in partnership. And pricing and methodology. So really to try and provide some sort of institutional clarity to the space.
Brilliant. Thank you. Coming back to you, Lucy. So, I mean, Coinbase is a company that everyone's very, very interested in. And, from our perspective as a data provider, obviously we've been working together for a long, long time. You always feature in the top 2, I would say, in our exchange benchmark review, having all of the right processes, the regulatory approach. Way before you weren't regulated, you always adopted regulatory grade standards. And I think that's always been appreciated by ourselves. And certainly by the institutions as well. You mentioned that staggering stat of how much AUM you have and what the turnover is. So you've got a strong market share for global spot trading. So it's really interesting, and perhaps the title of the panel itself as well. What are the institutions doing on your exchange? What sort of strategies are they employing, and any interesting sort of insights there?
Sure. So I think it's important to clarify that Coinbase Exchange is direct access to low latency liquidity from Coinbase. Now, that is mostly used by market makers, prop shops, etc., and they are normally using sort of market-neutral strategies. If we take a step outside of exchange and we look at Prime, as I mentioned before, with the multi-venue execution via the smart order router, we have, I can go into more detail about sort of, client segments specifically. So if we look at hedge funds, global macro funds are typically trading the basis. We look at multi-strat funds who are taking directional positions, and we're now starting to see systematic funds show interest as well. And then more broadly, if we look at family offices, they've actually been quite, into the crypto space for some time because their mandate is to obviously preserve the generational wealth. Millennials are now starting to get involved with their family offices as well. So they have that, typically they could be pro-crypto, and their strategy is more buy and hold. Yeah. We also have introducing brokers on the platform. So this could be challenger banks, private banks, regional banks, and they're utilizing the infrastructure via maybe like a white labeling solution. And then finally, what's also interesting is corporates. So corporate treasuries are looking at NFTs and also, payroll services, for example, and also yield-generating strategies such as staking.
So everyday adoption, not just catering to institution. You mentioned it might have been a little jargon. Some people in the room might understand, others might not. But trading the basis as a strategy, could you just briefly outline that, how that works?
Sure. So, for example, if a client or a hedge fund like a global macro fund is long the spot trade with Coinbase and then short the futures with the CME, for example.
Great, thank you. So on to Martin L. From an indexing perspective, I'd say MVIS is an OG in the space, right? And entered in 2017 in partnership with ourselves. Very proud to break new ground with you. But when you look at sort of the ETFs and ETPs that are attached to them, the question I always get is, well, why would I want such a product? Wouldn't I be better off buying coins and tokens? Could you just go through sort of why an ETP or an ETF makes sense?
Yeah, let's be honest, crypto guys, they won't buy an ETF.
Right.
And I mean, that's okay. They buy it on their own. As an active manager is maybe reluctant to buy an equity ETF and buys the equities instead.
Yeah.
But having said that, what a lot of people forget is that there is a huge chunk of money waiting, and it's just a convenient way to invest via an ETF wrapper, for example. Yeah? If you think of all the advisors out there, or retirement accounts, or just people who want to trade on a regulated exchange, the ETF is a very convenient thing, and we have massive volume in it, trading volume. So if we think of the US futures ETFs, Bitcoin futures ETF, and I don't want to talk about the difference between a spot and a future Bitcoin ETF and what is better, but if you look at the trading volumes, they are massive, and if you look at the spread, it's, I think, at 0.01%. So that's nothing. You can buy it in your Charles Schwab account for free. So that's very convenient. And you see the same in Canada with the ETFs. You see it in Brazil, for example. In Europe, we have the ETNs. Yeah, so that's another legal structure, but it tracks the underlying beautifully. And it just opens up a new audience. And if we want to have more adoption, and everybody's just talking about rising adoption in this space, I think we have to go this route and as an interim step. And at the end of the day, we can talk about tokenizing everything. So I think maybe tokenizing the index is the end game. Yeah? So where you trade via a smart contract on a DEX, and that's it. Yeah. But that's, I guess, years away. Not from a technical perspective, but from a regulatory perspective.
Absolutely. On-chain asset management. Let's see where we go.
We have to take a new license, I guess.
Yeah, exactly. Or create new licenses. Yeah, I guess that's what we're trying to do. Yeah. I guess staying with you, Martin L. Obviously, you've been around a long time. What are your most popular products? Sort of what are the issuers adopting, and where have you got the most AUM at the moment?
So, in terms of volume, if you look at the assets under management, clearly you see a lot of single token products out there, as these were the first ones, so the classic Bitcoin, ETPs, and Ether, for example. But we see a strong switch from just having single token to multi-token solution.
Yeah.
So the classic top 5, top 10, top 20 indexes, for example.
Right.
And that's a beautiful thing because you can have a guaranteed return, the market return. You can earn that. And it's just as buying the winners, selling the losers. And very recently, we see a shift to more thematic indexing. So we have our classifications, such as DeFi and Metaverse and so forth. Smart contracts are very popular at the moment. Yeah. And so you see a shift to more basket solutions.
Super. And I guess your, Martin H., your situation is a little bit more daunting, right? You've got to come in and offer, as we mentioned, a differentiating product. A lot of the indexes are sort of traditionally market cap weighted, and there are lots of different ways that you can factor such a product. I mean, you know, I'm always struck by the ability of people coming in, and we have genuine sort of rocket scientists working on these problems, and I've put you in that bracket. So when it comes to you sort of listening to your customer demands, what are they asking first and foremost? What are the trends? Maybe you could speak to Martin L's point that you're seeing. And I'd love to know, sort of, like I say, a little bit more detail, like how the product is being constructed on your side.
Sure. So we're seeing, I guess, two types of people come in. There's those that have not got exposure to the space, and typically they're asking for the single coin indexes. And I think that's because they exist, they're out there, and it's a safe way to become involved in the space. For those that come in with a bit more pedigree in their investments and who've got some investments already under their belt, then they're typically asking for genuine multi-coin indexes of the type that Martin was saying. So it's all about thematics. Yeah. And I think the reason they're asking for thematics is because the crypto space is so broad and so varying, and you have so many different technologies and different use cases available, that really, if you take this sort of venture capital type mantle and you want to invest in a particular technology or a particular part of the market, so be that DeFi or environmentally focused, or it may be smart contract platforms, rather than the top kind of 10, top 20, which is very broad. You don't know where your risk is coming from because the coins are so varied and the technologies underneath them are varied. So generally, it's two cases that they either want multi-coin or they want single assets. There's some very sophisticated investors who will be asking for volatility control and risk control, but they're not very common.
Thank you, Martin. So, Shobit, you explained the sort of Citigroup's scope at the moment, and one would uncharitably say it's not that, it's a little limited at the moment because you don't touch the physical at the, underneath. However, you're far more involved in the ecosystem than people think. You've got lots of different initiatives going, and I'd love to hear some of the things that Citigroup has done on that side, outside of the direct cut and thrust of the markets.
Sure. So we are actually selectively providing advisory services to emerging category leaders in this space. I mean, we have Coinbase over here in the panel, and they're one of them. But we're thoughtful about. Thoughtful about who we want to bank with, right? Like, so some of the examples of the deals we have done is Coinbase's direct listing last year and subsequent debt offering. We advised Galaxy on the BitGo acquisition. We advised on the Circle and on the Backed SPACs. So we are obviously as these category leaders emerge, right, and as they grow, the banking needs get more complex, right? They need to operate in multiple jurisdictions, and Citi, we pride ourselves in being the world's most global bank. We have presence in over 100+ countries. So as these category leaders become bigger, banking needs become complex. They need cross-border banking needs, and I think we're best placed to serve that. So we are actively looking at those opportunities, but we are also cautious about looking at firms who are operating under very strong regulatory licensing regime with a strong compliance framework. And I'm glad to have Coinbase here on the panel.
Well, you helped them go to market, right? That's quite a big little tombstone to have. And so it's interesting to see the equity capital markets team at Citigroup that I worked quite closely with back in the day, really sort of seizing the asset class and trying to bring the leaders, the category leaders, as you say, to market. So you mentioned then also your banking services and the research we've discussed. On the venture capital side, are you active as well? You make investments here and there, just for those of you who want to make a pitch at some point?
No. So we have, I mean, in general, we have been active investors. We have been one of the more active bank investors in blockchain companies over the years. And we've been investing in blockchain startups since 2014. I think we have made about 20 odd investments. But we typically tend to invest, our investing is strategically driven, not VC sort of driven. So we are looking to invest in infrastructure. So last year we led Amber Data's Series A. I know they're a competitor for you guys, but and we invested in TRM Labs. I know they are represented somewhere here. So obviously we're looking at making some strategic infrastructural investments for sure, but purely of a strategic nature rather than from a VC lens.
Absolutely, no, fascinating. So I'm getting towards the end of my questions. I've got one more that I've prepared for the panelists. I see some great questions appearing on Slido, and so please keep tapping away. We're going to have, I think, about six minutes for these questions, so we'll get through as many as we can. I always like to really expose everyone to these kind of things. So my final question. So I was recently in Berlin for a traditional ETF conference, and even though there were maybe 60 or 70 delegates only, probably there was $3 trillion worth of AUM in the room. And it was the likes, Legal & General and Credit Suisse, and perhaps the slower moving companies, the more risk averse and cautious ones. But they spoke a lot about what's the next thing for them. It's a huge market, the ETF market on the traditional side. And they unilaterally said, we look for growth and we look for ESG increasingly. Now, obviously growth we're seeing in crypto, so that's ticked off. That was an easy sell. The second one, ESG, can be a little bit more complicated to explain away for digital assets. And my personal argument is that digital assets lend themselves really well to ESG. But I'd like to see how the ESG story is sort of appearing at the great houses of our panelists. So what about on your side? Is ESG in focus, Lucy, at Coinbase? Like, what's our clients asking for ESG type solutions?
So we're currently building out the ESG strategy, so we will have more information on that relatively soon. What's interesting about, or what's challenging about ESG is there's no sort of ESG reporting standard for crypto at this stage. Yeah. So when we list assets, they go through a process for asset listing in terms of legal review, security, compliance, and at the moment ESG metrics are not included in that, and I think that's pretty standard for the crypto market. So as we kind of build out that strategy, we'll be able to share more information, and as there's more information and research.
Yeah, very interesting. But I'll tell you right now that there's a lot of money waiting for ESG friendly. It's certainly a classification issue first. Once you have a framework, you can then start attaching things to it. But Martin H., when you go on Wilshire, ESG is a big focus, and it's one of the things you look at. Could you add to Lucy's comments and how you think about ESG perhaps, and what you're looking to do, twinning it up with digital assets?
Yeah, sure. So at Wilshire, I think we tend to separate ESG and climate. I think they're two separate things. ESG is very much a corporate rating system, and depending on the motivation of the questionnaire, the person who wrote the questionnaire, you can have a good rating or a bad rating. How that applies to crypto, it's very, very difficult. A decentralized autonomous organization with no one to answer questionnaires is a very difficult problem to solve. That said, there are plenty of coins which have a governance aspect to their protocol. There are coins which have an environmental aspect to their protocol, perhaps via the proof of stake, for example. And there are coins that have a social aspect. for example, charitable coins and so on. But I think from a digital asset perspective, initially, our focus is very much on climate because climate is measurable. You can measure CO2 output. You can put a price to CO2. So it's very easy then, in inverted commas at least, to then create an index whereby the consensus mechanism emissions are offset, or where they're hedged, or where you can tilt away from high impact tokens towards low impact tokens. So for us, I think initially it's all about climate, and that's the accessible route.
Fascinating. Martin L., do you have anything to add on the point?
Yes, the one thing I'm worried about in this discussion, everybody's just focusing on the E side in crypto. Maybe we should call it SGE criteria for crypto, because when it comes to social or governance criteria, I think crypto does quite well. Yeah, so you don't have to be rich, yeah, in order to get rich in crypto. Yeah, you just can play to earn.
Not financial advice.
No financial advice. Yeah, so that's true. No price target. And when it comes to governance, everything is on chain. Everything is really transparent. But what we do need is a rating criteria, a scoring, as we have for equities as well. And if you are worried about the E, if you think of it, I think Bitcoin's share on the total carbon footprint is 0.1%. So it's not 1%, it's 0.1%. And some clients are working into making it carbon neutral. And there are two approaches. One is transaction-oriented. So you know roughly one transaction is on Bitcoin, for example, is 680 bytes. You can calculate the carbon footprint of that, or you have an ownership approach where you say, okay, what does it cost to hold one Bitcoin for 1 year? But at the end of the day, it really comes to transparency, because just investing in proof-of-stake coins is also not a solution, because you don't know what they make in terms of decentralization, governance practice, etc.
Yeah, no, it's interesting. Look, we need to have more ESG type conversations, because I think Bitcoin gets a very bad rap. 0.1%, as you say, of total carbon emissions. That's several orders of magnitude less than US Christmas lighting during the festive season. So let's put that into context. It depends also, it matters very much what one uses energy for and the utility that one gets out of it. A new financial system that is uncensorable seems like a good expenditure of energy. So the more ESG type debates we have, the better. Obviously, there are other protocols out there that are far more energy efficient, and as Martin says, lend themselves really well to the S and the G part, you know, banking the unbanked and that kind of stuff. So it's important to remember those lofty goals as well. And I'm very excited that lots of firms are taking up the challenge. At BCB have a dedicated ESG target and approach, and you know we at CryptoCompare are going to look to do the same as well. So look, we're on to audience questions, and I'm going to start with a really innocent question, but it isn't innocent and it isn't easy to answer, by Charlie Morris, who talks about, well, what needs to happen for the FCA to allow crypto ETFs in the UK? And unfortunately, Martin H., I'm going to ask you, because you're based here in the UK, but maybe you can speak more generally why ETFs have struggled in the States, and then use that as an analog if you need to.
Sure. So, I mean, I can answer what needs to happen to the FCA, but not on this stage. In the US, I think you won't see a cash ETF until the marketplace is regulated. So whilst the exchanges are regulated, the actual marketplace where you trade isn't regulated. And I think when that happens, and those US exchanges and those marketplaces are regulated, that's when you'll see the cash ETF. And that could be 3 months' time, it could be 6 months' time, it could be 3 years' time. The UK will follow suit, and it will regulate its marketplaces when that happens. It's probably already thinking about doing that now. Strangely enough, the FCA was very pro-digital assets 3 or 4 years ago, and subsequently it's cooled off a lot. And I mean, there's lots of reasons for that, and that's for discussions elsewhere, I suspect. But my suspicion is that once the marketplace in the US is regulated, then we'll see the cash ETFs there, and then that will flow through to the UK.
Thank you. Anything to add, panelists, or shall I move on to the next question? I'll move on to the next question, and it's one that I'd like to ask to Lucy. Unfortunately, you can't see it because it's just down there, so I'll try and ask it as gently as I can. Coinbase, obviously, a centralized exchange. You mentioned your prime brokerage service. Do you sort of access the decentralized exchange network as well as part of your offering, and how do you see decentralized exchanges at Coinbase? Any thoughts there?
It's a good question. So at the moment, the answer is no. How we see that going forward, I honestly don't really know the answer.
Okay.
I would need to kind of look into that in a bit more detail.
That's fine. Sorry, we get asked some
It's okay.
tricky questions by the knowledgeable people in the crowd. Let's have a look. Maybe Martin L. Biggest possible challenge for creating and managing asset indices. Maybe I'll start with a very brief anecdote. I remember when sort of somewhat controversial development at Ripple with the regulator there getting a little bit upset was that some of the exchanges removed Ripple as a trading instrument, and that was pretty controversial and maybe not entirely fair, but that had an impact on your index products, right? Would those kind of things be the biggest challenge? How do you even deal with that sort of thing?
So yeah, that's a good point. For sure, in crypto, you have to have a strong focus on the single token more than, for example, in the equity space. Yeah, you just don't take out Tesla or Microsoft. But having said that, I think we have rules in place taking care of such regulatory events. Yeah, when it comes to the SEC, we can take that out. But as I've mentioned, there are other things too. For example, Doge. Yeah, it's
right.
One of the most hated coins.
Yeah.
Apart from hacks. Yeah, so don't know if there are any hexicans here. Also a large market cap name, but very hard to sell in an index. Yeah, so you have to restrict that ex ante. Yeah, in your token universe. But I think when it comes to, generally speaking, crypto indexing, I think price is still key. So we don't have a consolidated tape, and so you have to produce one, and that's also a reason why we're happy to cooperate with you guys. Yeah, so we have a long-standing relationship, and you have to produce your own liquidity-weighted tape with multiple exchanges, volume-weighted, etc., in order to come with a good quality price. Yeah, I think that's the greater challenge than just excluding single token.
Nice. No, thank you. Look, I think that's all we've got time for. There are a few more questions outstanding on Slido, and so we'll please reach out to the panelists. I'm sure they'll be very responsive on email and answer some of those questions. And really, thank you so much to everyone, for Lucy, Shobit, Martin, and Martin. Thank you for your time.